Stocks popped today on news that inflation may be easing and continuing its downtrend. So the markets are hopeful that that means the Fed can pull the pedal off the metal and slow down a little bit. But that is not all great news, and we'll talk about it in a minute. But for now, the rally that we've been looking for could potentially be starting here for the next few days or a couple of weeks until the Fed meets again and we get the inflation report. If we get good news on inflation, then we can look for the rally in the continuation of the trend. So the Dow and the S&P were up a little over 2%, the NASDAQ up 2.5%. And here's the big news right here is the inflation watch. All investors care about is the data, is that the data suggests inflation is moving towards the Fed's target, which is the key. That's all investors care about. And average hourly earnings suggest inflation continues to slow. So that's what the markets are all excited about and why we saw the big pop today. So let's jump into the charts, and here's what we're looking at. The Dow still finding support here and potentially looking for a possible continuation to the range of a double top possibly in this area before potential rollover. If the inflation report is bad when it comes out and the Fed has to do another 50 instead of a 25, but if the inflation report is good, then it could kind of continue and range in this area for a little while. But worst case scenario, it could potentially just continue down on this trend line with a little up, a little bit of down, and ultimately work its way towards these lows to retest, which is most likely in the cards, a retest of the October lows to see if the markets will hold. And a lot of that's going to coincide with the inflation report coming out, the Fed meeting, and then earnings are going to be a big deal. Here's the S&P kind of continuation like we were talking about, looking for a potential rally back to the trend here. We were looking for this really starting before Christmas with the Santa Claus rally, but just too much bad news out there and a tough hawkish Fed that kind of dampened that a little bit. You know, this price action here on the NASDAQ kind of finding support on these November, October lows and taking out the June lows. The Dow has not gotten to this point yet. So right now, the October, November lows are holding on the NASDAQ. So the question is, once it reaches the trend line, potential, what's likely is a rejection, and then go back down and retest these lows again. And depending on what everything looks like, could kind of put in a little base right here and kind of range in this area to see what happens. S&P is kind of doing the same thing, working its way back to the trend. Possible rejection, could get up and find support above it. A lot of it depends on what does the inflation look like, what is the Fed going to do, and in terms of inflation and why lower inflation could potentially be a bad thing. So we'll talk about that in a second. Here's the VIX reversing trend, potentially working its way back down to the 19 level where we get those bounces, and we've been ranging since that December low on the VIX, looking at this August low, and then these highs on the VIX in October. That was your market bottoms. Dixie reversing today, rolling over on itself, 10-year rolling over on itself, looking like it wants to recheck that 3.4 level. So all in all, a good day for the markets. Let's take a look at silver, up a little bit on the day, gold up a little bit on the day. So right now, again, all eyes are on inflation. The markets want to know inflation is subsiding because that means the Fed can back off and the markets can try to carve out a bottom. But here's the thing. So the markets, as we've said, have priced in the interest rate risk. They've priced in inflation risk because inflation seems to be plateaued and reversing or coming down, albeit not rapidly, but it's trending in the right direction. But the big thing the markets have not priced in and cannot price in yet, which we're going to get to going into the next couple of weeks, is earnings, recession and earnings. Because we're not in a recession. We don't know if we're going to be in a recession. There's speculation that we will be in a recession. And inflation has never subsided until the economy has gone into recession, and the Fed has never been able to pivot really until we do. And they have to get the Fed funds rate above the inflation rate to reach neutral. And so in terms of inflation easing, well, that's a great thing for potentially for the markets in the short term, for a nice bounce, for the Fed to be able to stop what they're doing, kind of pull the pedal off the metal. But The problem with inflation easing is the effect it's going to have on earnings, because that affects top line sales, which affects profit, which affects earnings, which affects the valuations on the stocks. So those are the things that I'm looking at as we go into the weekend, and I will see you on the next video.